Hello, baby doll, jelly in a cup. So there is contagion going on in crypto and the world and banks. But there's some good news. The good news is we could see this coming a mile away. And that's because of 0% interest rates. The whole reason why Bitcoin was invented in the first place is precisely what you see going on right now. The banks, they had 0% interest rates. They bought bonds, and now they don't have any money because the interest rates went up. So when they go to sell their bonds, it's worth nothing, and they don't have enough collateral. So all of this gets into a mess, and the US Fed has to print. So look at this. I'll explain it for you right now. Look at this. Crypto investors, we are enjoying this bank fear, okay? And of course, I've got to start with the premise. Banks are evil scum who want to take crypto down. And look at this. Now, banks are in trouble with Contagion. 3, banks desperately now call the US Fed for help. So they get on the phone and they're like, oh man, here's my collateral. Here are the numbers. And, you know, if it's one or two banks, it's still bad, by the way, very bad. But once it starts going, there's multiple and they realize they've cross-collateralized. And remember, it's all just it's like a pit of snakes, all right? There's snakes everywhere. They're hissing. Look at these snakes in the pit right here. And what happens is they're all in a pit. And because it's all poo-poo fiat money, they're just sending it with each other. They go, oh, I've got $1 trillion. Let's move it to this bank. And they go, okay, I've got collateral here. And then they send it over to this guy and then this guy. It's all just a fugazi. It's all poo-poo lands, all right? It's all make-believe garbage. They're all just digital entries. It's all just a meme, okay? And it's funny that the system clogs up. But you know why it clogs up, right? Because there's no blockchain for it. It's just everybody just has to trust each other. And they say they're collateralized, but they're not, okay? It's a lot of crap. So now we're hoping for the next step. So now they're on the phone, US Fed, information travels fast now. We're hoping the next step is the US Fed holds rates. This is what we want. So the US Fed, they're scum. They're evil scum, all right? They put everybody in this mess because they control the fiat currency. And now when they're tightening, their policy is literally, we're just going to tighten until something breaks. However, you could have been scared in the past 9 to 12 months because you think, man, if they tighten and break the stock market itself, that is like game over because Bitcoin's going to go down 8, 9K. Everything's just going to capitulate really, really, really viciously, okay? However, I was saying, look, because too many people are watching the stock market, we might not get a stock market collapse. It's going to be something else. Now, the stock market's going down, but it's not like it's down like 40% or anything. You know what I mean? So it could have been bonds capitulating. It could be banks. It could be a country. It's something, right? Something breaks in the system. You saw at the end of 2022, you saw Great Britain, Japan, there were a lot of troubles, right? And they had to start doing QE. But now in the US banking sector, now it's hit home for the Americans, okay? So hopefully now, right, they're going to hold rates. And usually what happens is they wait and see what happens. So this banking sector, it doesn't really affect anybody on the ground floor right now. Or maybe it does, right? Maybe it's going to be harder for people to go get loans. Maybe things seize up. Remember, everybody is thinking about 2008, friends. This is the most important part. Look, when you have a collapse, so I'm going to show you this right now. When you have a collapse, people remember. That's why the market always does something different. So you have GFC that happened here. People still remember what it was like for the government to bail everyone out. They still remember how one bank failed, then the next bank, and then we didn't know what was going on, and oh no, all these things, turmoil. People remember, and the collateral, and all the ratios that they needed to keep topped up so they wouldn't go bust. We remember all these things. So now that there's jitters, I don't think we're going to get this. I don't think so. Because we remember, friends. Just like how you see the zombie virus. The zombie virus was big. No one was thinking about a zombie virus. And then a zombie virus came. Okay? When the mindset of all of us are thinking about it. Now, this is why you watch my channel. I can tell you what the average person is thinking about. I have a very good read on the market. You could say I'm one with it. Okay? It sounds kind of spooky, but yes, I'm here all the time. I'm like, I know what's on everyone's minds. Everyone's on banks and GFC. That's why, friends, that's why I loved, like, very, very strong libido when I saw a lot of the Twitter influencers, macro people, frauds, bears, all those people, when they were doing the stock market fractal, right, from GFC. I loved it. Do you know why? Because it means everyone is thinking about GFC, GFC, GFC. And because it's in everyone's mind, the zeitgeist, they think about the banks and the collateral. So we're ready. We're ready if it happens. It's like if you got hit by a car once, and now whenever you hear a car engine roar or a car speeding, you're super hyper alert. So you triple check the road now. You don't check twice, 3 times. You check like 4 or 5 times. It's the same thing. Okay? So that's what's happening now. It is quite amazing. But yes, we will get a black swan eventually one day. It'll just be something me and you can't see. Maybe the whole country of Japan's a Ponzi. I don't know. Like something so wild out there, right? But it's nothing we're going to think about. You can't do anything about it anyway. And you know their response to print it, okay? So we're hoping that they hold rates now, because we now have enough memes out there. We're like, hey, bank contagion, it might spread. So that's what we want the US Fed to be talking about. If they start talking about, we've got to be careful about that contagion out there. Once they start talking about that, that means despite the CPI, they're not going to hike rates. I want to remind you as well, back in the GFC here, as they were cutting rates here, the CPI was going up. Inflation was still going up as they were cutting rates. Because they knew the CPI is a complete load of shit. It's a complete load of poop. They're lying. They many times, they will keep cutting rates even as the CPI is going up, because they know what's coming. They know it's game over. All right, they do. They're scum. Central banks are evil scum. Now, then they do the printing currency part. That is the juice. This is where all our theory has to get put into practice. And here's what the theory is. The theory is, me and you are friendship. The theory is that they have printed so much money and they've plugged so many holes that they need to do exponential more printing. So this is global M2. You can see this is a log chart, right? So actually, no, it's a regular chart. You can see it starts from 2018. So you can see the hole. See this part? The hole that they had to fill, right? For the zombie virus. Now, this has been collectively printed over a long time. You have M2SL. I can show you right here. You can show that the money supply stock is going up and up and up. This is a log chart, right? It's going nuts. So the theory is whatever they printed here to cover up GFC and to cover up the tech boom, all these things, we're going to need all of that again, even more. That's what the theory is. And because they printed to save disgusting, evil scum banks, which is what they all are, because they print to fill their gap, there are weak banks that should have gone under, but they're still around because of the printed currency. And because they are weak, they should have gone bust. They make bad decisions. So when they give out loans, when they help out businesses, lend money for assets and all this stuff to customers, when they give out the loans, they're not doing as good of a job as they should. Therefore, the whole bank shouldn't even be existing under a capitalist system. That's the theory. So what's happened is the US Fed has been printing money this whole time and just saving a lot of poopy, terrible banks. So now basically the chickens are coming home to roost. This is basically what we're seeing now, playing out in real time. And then hopefully it's the pump crypto part as people realize, oh my God, they're going to have to keep debasing the currency. All the juicy stuff that comes out of that, friends. So that's the follow on. That's why we actually care about this banking stuff. We're seeing it play out in real time. It could have been any scenario. There's many that could have played out, but I'm happy that I can now show you, hey, this is the scenario that we can see coming. We can see coming. So we can see crypto total market cap, right? Total market cap is still 900 billion. So here's the thing. We don't know exactly what comes next, all right? Because look, Bitcoin only, friends, look, I'll just be honest, right? With the amount of money they printed from the zombie virus, you would not think crypto only stops at 2 to 3 trillion. We got scammed. Something happened, okay? So I don't know what's going to happen again. I'm hoping, this is what I hope. I hope everybody thinks it's a diminished return, but we actually do another 3x. So from the top to top here is about a 250%, so 3.5x, 250%, puts it at about 10 trillion market cap. I hope that's what happens. Right? hope and cope. That's what we want. So hopefully we don't actually diminish. Maybe we actually just do the same height again. Wouldn't that be fantastic? Wouldn't that be fantastic? Because we could then trap everybody in the next cycle. Because everybody thinks, oh, we tripled, and then they're going to think we're going to triple again to 36 trillion, but maybe we only go to 20 trillion. You see how I'm always like 2 steps ahead of the game, 15 steps ahead of the game. How are we going to trap everyone for the next one? So right now, everything seems to be going as planned. We just now need the US Fed to cave. So I have one more chart here to just show you the bond rates. The bond rate for the 2-year duration, right? 2 years of time. Look, the US 2-year bond rate is down to 4.66%. So it was, if you look at the top here, it was above 5% and it was going up. That's because Jay Powell came out acting like a full big dog saying, yeah, we're going to have to put rates way higher than you expected. Go back to my tweets and my videos from months ago. I was saying from January, I said, I think, friends, there's only one more hike left. One more hike. Now, I didn't know the series of events, but I kept saying, man, this economy, they're all full of fluff, friends. They're all full of fluff. This is how the game works. They're evil scum. So, next. So, the US interest rate right now is 4.75%. So, the US 2-year, this is huge, by the way. I saw this was one of the biggest changes in history for the US 2-year. That's basically the biggest shift from like, oh, you might hike to like, you've actually got to cut. This is a huge inflection point. You're going to see more follow-on through from this. So we're probably going to hear more about this. Interest rates change. They still think there's a 60% chance of 25 basis point hike, right? It could be possible that they do. I think it's either going to be they do a hike and they say, that was actually the last one, guys. They either say that or they just don't do a hike at all. Because we are watching this bank contagion happening live. And what we want to know for crypto is, right, look, at the end of the day, friends, look, I'm just explaining to you. All the theory and everything doesn't really matter. Look, I've been telling you from day one. It's all a meme, okay? They're all scum. Fiat is just one big meme. Money's a meme, all right? And they're going to print currency to fill the hole. Now that banks are in trouble, they're going to fill the hole. So you know what happens after this, right? Yes, there's turmoil. They print currency and they do the same thing. They do the same thing every time. They got to plug the holes. Bitcoin was invented by Satoshi precisely for this. That's what he knew. He goes, hang on, you guys are going to keep funding the banks and you're going to keep printing currency and people are going to get into bigger messes. That's why he released Bitcoin for the world, okay? So I'm hoping, fingers crossed, that in the next wave, we don't get too much turmoil. It depends on their response. This is really good for us. The good thing is, this is an echo ghost, right? If you have a bank contagion narrative here, you also had a bank contagion back in 2008. And everyone remembers. It's in everyone's minds. So therefore, you might expect a faster response, a more aggressive response, and you might expect the stock market, it needs less words and less calming down to price in the future. So how I can translate in the price chart for you, basically, stocks don't need to go down this far and then go up here back to mean revert once the government calms them down. It's possible stocks just go like, ho. Like, let me just do this. I'll show you why. Like, stocks might go, whoa, we're nervous. You see this? This is a different pattern to just, it's over, right? It's a completely different pattern. One, you got the squiggles. You got the squiggles of friendship. You're like, whoa, are you going to figure it out? What are you going to do, Mr. Government? We want that to happen because that's basically the market going, hey, like, I know things are bad, but they're ready to print at any time. So we don't want to price us super low, right? So, the market's always forward-looking. It's a forward-looking mechanism, okay? So I hope this makes sense for you, friends. I'll catch you next time. And don't forget, your mum and your dad, you tell them you love them.